Stocks fight to hold some gains with IT, realty and metals among the outperformers. The healthcare stocks are the big laggards.
Indigo Airlines parent Interglobe Aviation is facing rough weather over a rush of flight cancellations, which the airline blames on the weather, congestion and updated crew rostering rules. The airline hopes to normalize operations in 48 hours.
JSW Steel inducts Japan's JFE Steel as an equal partner in Bhushan Power and Steel to expand and grow the business. JFE's investment at an enterprise value of 53,000 crore rupees will help JSW Steel pare down debt significantly, and that gets a thumbs up from analysts.
The Biocon board is set to meet on December 6th to consider buying out shares of investors in its biologics arm. It also plans a fundraise which could help facilitate the buyout. The stock slips.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me, as always, Arundhati Ramanan. Arundhati, good afternoon. And well, after 3 days of losses, one would have hoped that there would be some gains, but the Nifty as of now is fighting to hold on to some bit of green, still 20 points higher. But the principal culprit of this coming off the highs of the day for the index has been the Nifty Bank, and that index is now down 400 points from the highs of the day. 59,550 was the high, and now we've come off 400 points from those levels. At the lowest point of the day is the Nifty Bank, and that has had an effect on the Nifty, which is now fighting to hold that 26,000 mark. And of course, today being the Sensex weekly expiry as well, so that needs to be taken into account. So that some expiry related volatility coming in to the markets, and banks ahead of the RBI policy are leading the indices lower.
Absolutely, Hormaz. Good afternoon. Like you said, the markets are fighting to stay in the green, absolutely flat right now. But there are some sectors that are doing well, right, that are seeing green. That happens to be the IT pack, which continues to clock gains on the fall in that rupee. So if you take a look at it, TCS, HCLTech, Tech Mahindra, all of them up over 1%. But it's not just them, it's also the real estate stocks that are doing well ahead of the policy tomorrow. So Godrej Properties, Oberoi Realty, Prestige Estates, all of them over 1% higher. The metal pack also doing well, JSW Steel, Tata Steel, all of them holding well in the green.
Yeah.
But first up on the show, airports across the country are in disarray as India's largest carrier, Indigo, gets hit by massive flight disruption following updated flight duty limit norms. Over 1,200 flights have been cancelled in November so far, and the airline has also cancelled over 200 flights just today. Shivani is at the Delhi airport to get us the latest. Shivani?
Well, yes, I'm standing at the Delhi International Airport's Terminal 1 right now, and sources in the Delhi airport team have told us that a total of 33 Indigo flights have been cancelled since 12 a.m. this morning, and these cancellation numbers are likely to rise during the day. Bangalore airport sources have also suggested that a total of 73 flights, both incoming and outgoing, have been cancelled by Indigo from the Bangalore airport, and similarly from Hyderabad a total of 18 flights have already been cancelled this morning till 9 a.m. So this takes the total upwards of 120 total flights being cancelled today, and it's just half the day we have seen pass. So this number is likely to be to go up a lot during the day. In the meanwhile, we are also getting to know that DGCA has called on and summoned Indigo's top management to come and just tell DGCA and explain what is the kind of issue that is happening and what is the way out of this. So we'll keep track of this story, we'll keep tracking it. So far 120 plus cancellations already across 3 major airports in India.
Shivani, thank you for that update. And from one major airport to another, from Delhi to Mumbai, and Sandhya is here with the latest from the Mumbai airport.
The Indigo airline chaos at major airports across the nation continues for the 4th consecutive day. On Wednesday till 5 p.m, as many as 33 flights were cancelled and 51 flights were delayed at Mumbai airport alone. Indigo has cited a technical glitch and crew shortage due to winter season rostering as the reasons behind the disruption. However, aviation experts say the situation has worsened due to a lack of proper planning while implementing the revised flight duty time limitations, which led to an acute pilot shortage. Experts also point out that an Airbus software patch rolled out over the weekend weekend played a significant role. Right now, we are at Mumbai Airport, and this is a queue outside Indigo counter. These passengers here are waiting for information regarding their cancelled flights, and they're also trying to reschedule their flights. Now, if we talk about all these factors, whether it's the crew shortage because of winter season rostering, or technical glitch, or Airbus software patch, or the lack of proper planning for revised FTTL, all this has led. All this have had a domino effect on the operations, and the DGCA has now summoned the airlines. Indigo, in the meantime, has said that it's working round the clock to rectify the situation, but also admits that it may take another 48 hours to fully normalize operations. Indigo claims that it is providing it is making proper food and accommodation related arrangements for the passengers. However, the passengers we spoke to had a different experience.
I've been trying to contact even the customer care, but no one is lifting the phone. But we are waiting here for a long time.
My Mumbai flight was cancelled. From Surat, they are on their own. They are postponing it to 6th. What do I do till 6th in Surat? Nothing. They have not even bothered to answer the phone call.
So call center is not picking up the call, and I'm putting my PNR. It's saying non-existent, and so I have no option. I had a scheduled meeting in Bangalore. So that's very important for me, but somehow I have no idea how to go there now.
I received a message from Indigo at 5:30 in the morning that my flight has got cancelled. And I'm calling the call center from last 2 hours. I could not reach the call centers. And everyone who is waiting here from last 2 hours. I'm in this line from 1.5 hours and I'm not in the forward action. There is no response from the Indigo people.
That's Santya there with the latest on what's happening from the Bombay airport over these massive cancellations by Indigo as well as disruptions with their flights. We also spoke to aviation industry experts earlier today on this issue, and here's what they had to say.
Flight and duty time limitations are not for the benefit of pilots, not for the luxury or relaxation, but it is essential to safety of flights. Some airlines, when pilots have asked the airlines that they're compromising on flight and duty time limitations and insisted on safety, those pilots have been even sacked from the airlines. There are enough evidence. Don't ask me for details because that's not necessary, but that is an absolute fact. Pilots have been sacked, engineers have been sacked, many crew who have pointed out the faults or pointed out safety compromises that the airlines do have actually been sacked. That is the important part of it. You cannot compromise on safety.
The coup de grace, so to speak, is this FDTL issue, which airlines all these years have been, along with DGCA, they've been managing to postpone it. And things came to a head. And this year, they expected that, again, they will get an extension. And when the DGCA did not give them an extension, things have gone a bit haywire. I expect them within 48 hours, at least they have been bold enough to say, yes, we are cutting back capacity in order to, kind of reset the whole situation. Indigo stock will definitely take a hit in the short term, and I must give a disclosure. I'm an Indigo shareholder myself. But I definitely feel that there will be a hit in the short term, but on the long term basis, I think it's shall we say, par for the course. The airline is very professionally run, and they will come back to it.
Time for a short break. More news and updates on the other side. Stay tuned.
Welcome back. You're still with us on Business Lunch. Markets giving up their gains of the day, but the Nifty now right below that 26,000 mark. But the rupee also set a fresh low this morning of 90.42 to the dollar. But thereafter, the market has recovered, partly by RBI support and partly by dollar sales. We have Lata Venkatesh with us with more on the rupee. Lata?
Well, that's true. The rupee started lower, 90.40.42, because the NDF market, the offshore market where the rupee is traded, was at 90.40 when we started trading. So it immediately started at that level. But it appears at that level that there is not just RBI supplies, which is, everyone tells you, is limited. It is there, but it's not trying to influence the market. The natural support for the dollar to go higher seems to have ebbed. And dealers were in particular pointing out to what you call the RBI fixing. That fixing is a period when month-ago sales are, forward sales are settled. At that point, a lot of people thought that banks will come to buy dollars to supply to the RBI. Looks like all those banks had already bought. So the dollar demand also did not materialize. And then we started seeing the dollar getting a little cheaper. It came towards the 90.17 mark. And later on, towards noon, we also saw it going, to 90.05, 90.06 levels. The impression in the market I got is that RBI is not there in full scale. It's also possible that the market does not want to take too many decisions ahead of the policy. There were quite a few dealers who told me that the natural demand for dollars itself is less today. Either importers have covered, or yesterday everyone was caught napping. They had short dollar positions above 90 and suddenly the dollar became 90.30 and they had to come and cover the short positions by buying dollars to square off those short positions. Today, there are no such shocks in the market. So the natural demand for dollars also is less. And that may explain why you see a decent recovery in the rupee. It's at the moment a little stronger than where it ended yesterday. Everyone maybe wants to keep still before the policy announcement comes on December 5th. And thereafter, maybe people will start taking fresh positions. The market's expectation, even in the morning, was that the RBI won't do much around 40. Maybe the next level they will choose is 90.50 because they've shown a penchant for these round numbers. They supported at 88.50, they supported at 89, 89.50, then 90. So that 50 is a number everyone was looking for, but it never got there.
Interesting, and that's possibly the policy is also possibly one of the reasons why the markets are a little jittery this afternoon. And 90.10 is currently where the currency is. So it's a significant recovery from the 90.42 low that it made earlier in the day. Now the policy due tomorrow. Ritu is here with all the key expectations. Ritu.
Will it or will it not? The decision of the Reserve Bank's Monetary Policy Committee has the street deeply divided. India's robust growth numbers for the second quarter are raising questions about the need for lower rates, despite the record low inflation opening up room for the MPC to cut rates. And the falling rupee is only complicating matters for RBI even more. Now, against this rather dramatic backdrop, the CNBC-TV18 poll shows a clear majority still leans towards easing. 60% of our respondents expect RBI to deliver a 25 basis point rate cut, while 40% believe that the committee will choose to hold. But even among those that are expecting a cut, the belief is that the easing cycle is going to be very short. A strong 60% say the cycle will end in December itself, while 30% expect one last move in February, while 10% think the cycle has already ended. Now, on the eventual landing point for these rates, the sentiment clusters around 5.25% as the likely terminal policy rate. 60% of the economists back that level. Another 30% expect the RBI to settle slightly higher at 5.5%, and only 10% see room for a deeper move to 5%. Now, as far as the macro forecast is concerned, with the economy expanding at a far faster clip than anticipated, 8% average for the first half of the year already, half the respondents believe RBI is going to upgrade its FY26 GDP outlook to 7.1 to 7.2%, and 40% expect an even sharper rise to more than 7.3%. Now, the confidence in growth comes alongside strong disinflation trends as well. So a decisive 90% of those polled expect that the RBI will lower its FY26 CPI projection to 2 to 2.5%, while the rest foresee a slightly deeper cut. Now, even if RBI cuts rates, respondents are very clear that the policy stance will remain neutral, but the tone, they say, may soften. 60% in fact expect a dovish message reflecting comfort on inflation. Now, as far as the rupee's recent weakness is concerned, most do not expect it to influence the decision, with 80% saying the currency will not impact the outcome and the central bank will remain focused on its inflation mandate with an eye on growth. Finally, the liquidity surplus has narrowed amid the tax outflows and RBI's intervention in the forex market. And from December to March, we also typically see cash withdrawals from the system. So the market expects RBI to communicate some liquidity easing measures, including the possibility of an operation twist or OMO purchases.
To cut or not to cut, the big dilemma for the Monetary Policy Committee. We know of that at 10 a.m. tomorrow morning. Take a short break. More news and updates on the other side. Welcome back. Now, Russian President Vladimir Putin is set to arrive in New Delhi for a two-day visit. Parikshit is here with more on Putin's agenda for New Delhi. Parikshit.
President Putin will spend 27 hours in India. Tonight, after landing, he has a private dinner with Prime Minister Modi. Tomorrow, he receives a ceremonial reception at the Rashtrapati Bhavan. He will visit Rajghat and then hold extensive discussions with Prime Minister Modi. And then both leaders will address a press conference. President Putin and Prime Minister Modi will address business leaders. Finally, President Putin meets India's President Draupadi Murmu before departing from the country. We can expect economic cooperation to be a major focus area during this visit. Russian president is coming with 7 ministers and a large business delegation, 10 intergovernmental agreements, 15 commercial deals to be signed during this visit. Both nations will adopt a joint statement and announce a future economic cooperation program. Ahead of this visit, Russia has promised to increase imports of chemicals, raw material, equipment, textiles, consumer products and food products from India. There will be discussions on an India-Eurasian Economic Corridor, FTA, India to push for a greater export of pharma, textiles and agri-products to Russia. Both sides will sign an agreement on migration of Indian skilled workers to Russia. There will be discussions on Eurasian transport framework to boost connectivity. India and Russia will explore increasing connectivity via the International North-South Transport Corridor and Chennai-Vladivostok Corridor as well. There could be an agreement on Arctic shipbuilding and tech, space and nuclear energy will be outlined as major priority areas for the future. Both sides will reaffirm the target of $100 billion in bilateral trade by 2030. For context, the bilateral trade currently is around $68.7 billion. Indian exports stand at $4.9 billion, include pharma, chemical, steel, marine products. India's imports were $63.8 billion, and this includes crude oil, sunflower oil, fertilizers, coking coal and precious metals. On the defense front, there will be an announcement on ratification of the Military Logistics Pact, which will allow India and Russia to access each other's military bases. Russia is like to make a strong pitch for full technology transfer for the Su-57. But India won't make any commitments just yet. Russia to propose selling S-500 air defense systems to India, but no decision is likely during this visit. India and Russia will explore co-development and co-production in several areas. Now, when it comes to energy, Indian entities are likely to continue importing Russian oil. 35% of India's crude imports in November came from Russia. Russian oil imports were around 1.9 million barrels per day till the 21st of November, when the sanctions came into effect, and our crude imports from Russia will continue in the range of 800,000 barrels per day in December. Now, this is because Indian entities can still buy oil from non-sanctioned Russian entities. When it comes to global issues, there will be a discussion on the Russia-Ukraine war, strengthening BRICS and reforming SCO as well.
All right, Parikshit, many thanks for taking us through the details of Putin's agenda in India. But with that, it is a wrap on this edition of Business Lunch. Mid-Cap Radar comes up next.